Hello, good morning and welcome to a brand new week and a new edition of the newspaper show with ET Now. I'm Varun Hirimath and I'll be walking you through the newspaper headlines for the next half hour or so. Before we go any further with that though, let me remind you that if you do want your newspaper delivered to your residence, please go to wantmypaper.com where the Times Group is making all the facilities available for you to once again have your newspaper delivered to your residence. It's completely safe. All the personnel at the presses are following the highest safety protocols. So please do go once again to wantmypaper.com where you can explore home delivery of newspaper once again. With that being said, let's now move forward to the top 10 stories of this morning, beginning with the fact that e-way bill generation is now close to pre-COVID days. Retail sales of vehicles have also picked up speed tremendously in June. Amazon stake a not in RIL future deal? That we'll wait and watch. Geo inflows help rupee climb to new highs. Airtel zooms in on video app for companies. JSW won't import from China, says Sajjan Jindal. Most PSU banks report negative ROA in FY20. PE deals drop 40% in the first 6 months of 2020. Privatisation to revive growth, says the DEA secretary. And indicators to track migrants in the works. Those were the top 10 stories from ET this morning. Let's also take it forward with the top 5 corporate stories, and that is that a washout Q1 awaits IT firms, according to analysts. Unions failed to convince Bajaj to shut unit, despite the rising COVID cases. Maharashtra hotels may get nod to reopen soon. Techm will bid for BSNL's 4G tender, says CP Gurnani. And 17% of startups have shut shop, says the FICCI survey. So that was getting you a feel for the corporate agenda this morning. Let's now get to the markets. VIX has fallen to its lowest since March 6, so that's something to keep out for us. ICICI Bank plans a fundraise via equity sale. Board will meet on July 8th, so that's an interesting one as well. The top 10 firms have added 1.37 lakh crore in market cap thus far. IT firms gain revenue share but lose on margins. And SEBI steps up vigil against insider trading. So we've seen those inquiries in Ruchi, Soya, etc. So now that we're done with all the headlines for this morning, let's take you through some individual stories that are pretty important. Beginning with retail sales of vehicles have picked up speed, and this is actually headlining the front page of the Economic Times this morning. It seems that retail sales of vehicles far outnumbered dispatches from factories to dealerships last month, suggesting a recovery in the market while also highlighting the supply constraints faced by manufacturers. Industry data suggests retail sales of passenger vehicles at 1.7 lakh units in June, which is about 50,000 more than the estimated cars and UVs that left factory gates earlier. So quite a positive development there. I'm not sure if we have a researcher on board to take that story further this morning, so maybe we'll just move forward with the next one. The next one, which is also on page 1 of the Economic Times, is talking about the impact of Jio on rupees, and apparently it's kept the rupee higher. This is again on page 1 of the Economic Times. About $15 billion of overseas funds raised by Jio platforms are due to enter the Indian financial system in just 2 weeks. Let me remind you, that's almost 15 to 20% of India's FDI this year, reflecting renewed global confidence in the country and helping add sheen to the rupee. Traders estimate that 4 to 6 billion of funds have already come into Jio last week, and a similar amount is expected to flow in this week. Do remember, on Friday, the rupee closed at 74.64 and could well rise up to 1.5%, breaching the next crucial level at 73.6 as per experts. So that's quite interesting. Do keep an eye out for that. Reliance just powering our indexes, doing all the heavy lifting. The next story from me this morning that I have to talk to you about a little bit is ICICI Bank, and they are now joining the long list of lenders in the line for a potential fundraise. So the meeting will be on July 8th. Earlier on last week, they communicated that the raise may be as high as $3 billion. So when ICICI Bank comes forward and they're going to try and raise that kind of money, it definitely spooks investors, which is why that stock has been under pressure. Kotak just raised, SBI is considering, Yes Bank is considering. A lot of banks are considering fundraise right now because they just don't know what the asset quality is going to be in the next 2 quarters. So whether you're a really good bank like HDFC, or maybe a PSU bank like SBI, or a struggling bank like Yes Bank, you're going for fundraise. So that's a key one to look out for. The next story I believe that we have this morning is talking about a push for infrastructure. And that is again on page 1 of the Economic Times. In an interview with the Economic Times, Economic Affairs Secretary Turin Bajaj said that a push for infra privatization to revive growth is on the anvil. Bajaj also said that the government is looking to road and railway projects which can have a spin-off effect to play a key role in revival. So, two key sectors that are very important, and as we look for revival and where the government is going to focus its resources that have been allocated, it seems that road, railway projects and infrastructure development are the sectors which will be spearheading this government movement and investment. Of course, there'll be a whole bunch of stocks that will also activate on the back of this news, so do keep an eye out for that. And if you are interested, do have a read. Again, it's on page 1 of the paper this morning. Let's now surge forward to another very important story regarding Reliance and Future Group. Now, amid talks of a possible Reliance Retail Future Group deal, Amazon's stake in a Kishore Biani holdco has emerged as an issue that needs to be resolved. As Reliance Retail and Amazon are competitors. So my colleague Vinny, who actually tracks the Future Group story quite closely, is now with us. Vinny's not with us this morning. So we all know that Future Group is in trouble. There's a lot of debt which needs to be paid back to the bankers, and while we are in the state that we're in, given lockdown, there's been a huge problem for Future Group companies. They're retail companies, so there's not enough flows and business. So Reliance had emerged as the front runner for these assets. They were also looking at pairing off the insurance business Future Generali, which we spoke about last week, in line with the same thing. So basically, what the article this morning says is that there is a hurdle now in this deal, whereas for this holdco of Kishore Biani, there needs to be some adjustments in order for the transaction to go through. So again, it's on page 7 of the Economic Times. It'll be interesting because Future Group stocks have really rallied from the low based on the fact that Reliance might be coming in. And we all know that Reliance is in a firm place to make acquisitions right now. So do have a look out for that one as well. Okay, I now think that we are surging forward to what the mutual fund average AUMs have been trending like in recent times, and Jayesh is the guy to talk to about this usually. It seems that according to MFs, that's mutual funds, average AUMs have fallen 8.9% in April to June. Franklin being the worst hit, declining sharply by 31.4% in April to June quarter. So good morning, Jayesh. Welcome to the show. I know you follow the AMFI data really closely. What cues are you taking from this data, and is it kind of what you expected or below your expectations?
Good morning, Varun. So first and foremost, this is, way off from the expectation, because if you have a look at how the markets behaved in the quarter gone by, they were quite positive. In fact, one of the best quarters that we have seen in over a decade as far as the equity markets are concerned. The data, however, for the AUM shows on the contrary, because, it has been a dip of about nearly 9% for each fund house that we've had. For the March to April to June quarter that we've had. And of course, there were some minor hiccups, the likes of Franklin Templeton shutting down 6 schemes. Those events did happen in the quarter, but, having such a big divergence is really surprising. So we'll have to actually figure out whether this is the equity side or the debt side, AUM split that has actually led to this decline. But the average AUM slip has been nearly 9%, like you mentioned. It has fallen to about 27 lakh crores. from 27 lakh crores to nearly 24.5 lakh crores for the entire industry. And Franklin has been the worst hit. It has taken a knock of about 31%. But not only that, some of the other big funds also, like SBI Mutual Fund, their average assets have fallen about 2.5%. HDFC Mutual Fund about 3.7%, and ICICI Prudential Mutual Fund also nearly 7%. And there are three funds which actually stand out because they have actually gained in their average assets. PPFAS being one of them, its average AUM has risen about 15%, and you have ITI Mutual Fund and IIFCL Mutual Fund also, which has seen an increase. But this is definitely something, the divergence is worth looking for.
All right, Jayesh, thanks so much for walking us through what the Amphi data is suggesting this time around, and so much happening with the equity markets. It'll be interesting to see what happens to these mutual fund flows going forward. So thanks again for joining us this morning. Let's switch gears a little bit to the IT sector. And based on the fact that earnings are right around the corner, first week of July, I mean, this week is when we'll be starting to hear from some of the IT majors. A major washout is expected, but which sector isn't expecting a washout in Q1? It'll be interesting to see. That being said, about IT, they're expected to report a 5 to 10% drop in their revenues for the quarter ended June, with many clients in the US and Europe cancelling or putting off discretionary spending on technology due to the COVID-19 induced business disruptions. So this is broadly something that we'll be looking out for with all the IT companies, also the H-1B visa, which was going to be impacting them, as well as just the US's stance on what it wants to do with IT imports going forward. So a key quarter for the IT industry. And if you are interested, please do have a look at the newspaper. There's plenty more there for you regarding this. But moving forward, yet again, just coming back to banking for a second, I believe, HDFC Bank put out a very interesting filing over the weekend. And to everyone's surprise, advances, deposits continued to grow in Q1, despite the fact that we were expecting a significant slowdown for banking stocks. So there's been a loan growth of 21% YOY. Now sequentially that growth was just 1%. So it does show you that they've slowed down. But if you still look at it on a YOY basis, it shows that the banks might show you decent growth this year. Deposits at the same time have grown 4% sequentially and by 25% YOY. So deposits are even outpacing your advances, which is not a bad thing because it's going to make sure that there's no issues on the capital side. The bank's loan book expanded to 10 lakh crore versus 8 lakh last year. That shows you a 20% increase. And the deposits went to nearly 12 lakh versus last year's 9.5 lakh crore. So that shows you an increase as well. The CASA is also holding up at 40%, and they've purchased about 1,400 crores worth of loans from HDFC Limited this quarter. So that's an interesting filing from HDFC, and it'll be interesting to see how that counter holds up today in trade. Okay. Now that we've got banking out the way, let's come back to Vivek, who I believe is now with us. So good morning, Vivek. Welcome to the show. Sunny Gaur, son of Jayaprakash Associates, JAL, and founder of the promoter group, has resigned as a director of the beleaguered company to venture out on his own. So what's really happening at JP between the promoters? Could you walk us through it?
Good morning, Varun. So, Jayaprakash or the JP Group, as they are better known as, once upon a time, a blue chip stock, a blue chip company with interest in power, road, cement, as well as real estate. But, if you're talking about this particular company, over the last few years, it's battling significant action, number one, from the authorities coming under the pump in terms of the high debt that the company as well as the group has. And in fact, it was classified amongst the dirty dozen when you're talking about, the entire 12 companies or the 12 high-profile groups that had extremely high debt and that were being dragged to the NCLT. So now, the company or the family that has already lost control of one of the group companies, JP Infra Tech, with a significant amount of real estate assets, is now seeing family trouble as well, according to what the newspaper is reporting. They're saying that Sunny Gaur, and Manoj Gaur are now all three venturing out on their own, today's headline mentions Sunny Gaur. What they're saying is that he's looking, given the fact that a lot of the assets are now no longer in control of the group, he's looking to venture out on his own. And what he is saying is that what the article is saying is that he's looking to get into the EPC business for construction of roads as well as housing projects. So now it's going to be very interesting to see, number one, what is the outcome of all of the regulatory action or regulatory oversight as far as this entire group is concerned, and whether they can come out of this, in a clean manner.
Right, Vivek, most definitely will be keeping an eye out on this story. Thank you so much for bringing it to our attention this morning. Okay, let's move forward. Another ET Now exclusive news break confirmed. Ajay broke this story last week about Edelweiss's fundraise plans. Now in the Q4 numbers, despite some operational headwinds, the fundraising news has been confirmed. So good morning, Ajay. Welcome to the show. You got it right again, as always. So why don't you walk us through what exactly happened this Q4 and what it means for Edelweiss?
Well, Edelweiss is one stock which will be in focus on Monday. A lot of details have actually come out, especially for the results. It's the biggest loss they've seen in almost 12 years because of impairments made, one for the credit business, also for COVID-related one-off impact. All of that has been, clubbed up into one quarter, kind of a kitchen sinking quarter, if you will. But moreover, the exclusive story with ET Now broke on Thursday regarding further stake sale and monetization of their wealth business. There is a special mention in the presentation about this plan going forward. Anywhere between 1,000 to 1,500 crore would be raised via a further stake sale in their wealth business, and a final decision will be taken in the next 6 weeks. So part of that has come true. The exact name which we were talking about in our exclusive story, that global private equity companies are keen to pick up a stake, that has yet to come out. Moreover, they've also taken board nod to dilute another 1,000 odd crore plus as far as the parent company is concerned. So a lot of monetization talk coming in the result presentation this week. We had already told you about that on Thursday. Of course, the numbers are something to watch out for, and market would take cognizance of the numbers. But it appears that it's kind of everything getting factored in now on, and they're cleaning the slate once and for all and taking it forward in a new way from here on.
Bringing us the latest on that, Ajay. Let's move forward now. Maharashtra is likely to reopen on Wednesday, says the Economic Times, page 3. The Maharashtra government is working on a plan to reopen hotels and restaurants in the state very soon, said Chief Minister Uddhav Thackeray. Representatives of the Federation of Hotel and Restaurant Associations of India have told Economic Times that they might be able to start within the next 2 weeks. So it's a key sector. It's losing out on so much revenue. Hotels are going to show zero revenue this quarter. Restaurants have really had a challenge. Even though people are ordering home, the volumes are barely representative of what used to happen before COVID. So if these guys aren't allowed to start by making private dining arrangements or figuring out social distancing within the restaurant, you might see so many restaurants and smaller hotels shutting down. It's a major risk. So something to keep an eye out for if you're interested in reading page 3 of the Economic Times. Okay, also moving forward quickly now, Times of India, page 8, Kuwait's labour bill has caused an alarm. So, a draft bill to reduce the number of foreign workers in Kuwait has been deemed constitutional by the Legal and Legislative Committee of the state. While the bill still has to be vetted by another committee, as Kuwait chalks out a more comprehensive plan to cut down on foreign workers, it has led to fears in India that as many as 7 to 8 lakh Indians working in Kuwait could be forced out of the nation if the bill is enacted into law. So some Indians working overseas fearing for their jobs. But with that, we are now completely out of time here.